welcome back. Well, the market's not fallen a lot after opening lower, but it's not been a sharp recovery as well. In fact, a lot of stocks are moving to the low point right now. Today is turning out to be a bit of a grinding lower day for now. In fact, the Nifty is at the low point now, 100 points lower on the Nifty. The stock that's breaking down now is Maruti, ahead of its numbers. We're not expecting good numbers from Maruti, and I think the street's beginning to price that in. I mean, it's already done that through the last few weeks, but today also that stock's moving to the low point. We have Ashwini Gujral, Mitesh Thakkar back with us. Prakash Gaba is also in studios. Ashwini, tough opening. The market's not breaking down, but not seeing any kind of recovery as well. Your thoughts on how to approach trade from here?
Well, I told you not to look for breakdown or breakout. This is the time to get in. 25, 30 point stop on the Nifty. You're almost at 10,120. People are giving up. The market is moving down, etc. That's getting fresh shorts trapped in. I would buy into Nifty and Bank Nifty currently. Obviously have a 25, 30 point stop on the Nifty. Bank Nifty, you can say basically 24,800 is a nice stop. I think at some point if the market decides to reverse, you will again have a fairly sharp rally. I don't think there is great life beyond 10,100, at least for the day. And this is the time to get in at lower levels, hoping for a rally. Having said that, Financial is a buy with a stop of 405, target of 421. HPCL is a buy with a stop of 232, target of 246. And Canara Bank is a buy with a stop of 208, target of 220.
Actually, the Hong Kong markets moved a smidge lower, not a great deal. They were down about 410, 415. Now they are down 450. But just a wee bit lower. Things are not recovering, but there's no breakdown. Mitesh Thakkar, good morning to you again. What are your 10 AM trades?
Good morning, Lata. I have two buys as well. I think the idea is very simple that we've been trying time and again seeing the index bounce back from this 10,120, 100 zone. So as long as that is not being broken, I think this is a good time to possibly attempt some long positions in stocks which are showing good traction on the intraday charts, and I've identified two of them. Canfin Home is a buy with a stop at 243 for targets close to about 260. And REC is a buy with a stop at 105.75 for targets of 113. REC has actually moved up in the last few minutes. Try to buy it around 107, 108.
Okay, well, Bajaj Auto's intraday chart should come up for you. The stock actually had moved lower post the management commentary that they will continue to pursue market share over margins, and that stock went to the low point of trade, so keep an eye out on that. You also have Prakash Gaba, who's joining us here in the studio. Prakash, hi, good morning. The financials, the NBFC stocks are getting hit once again. Indiabulls Housing is now down 6%. Anything that you would short in this market or buy on a dip? I mean, how are you approaching trade?
Good morning, Sonia. I'll have one buy and one sell. Indiabulls Housing certainly is looking weak. I think it's heading down. Possible target on the downside, 650. Who knows? It can go down there or even lower. But looks like it's going towards 650. I would have a stop about 730 and trade short on Indiabulls Housing. But I like Shriram Transport on the long side. We have results today. Possible target on the upside, I had 1080. I will modify it to 1100 zones. It's closer to that. And I had a stop of 1020. I'll modify that as well to 1030. The target is 1100 on Shriram Transport. Stop 1030 or even 1040 should be fine. Good play on the wrong side.
Okay.
Okay.
Well,
actually, it's important that the morning's low has not yet been violated.
Yes. It hasn't on the Nifty. Bank on the Nifty, I think it has, if I'm not wrong.
But by a smidge only. I mean, what was it? 125 became 124.
Yes, but that's
didn't
good
go
enough.
10,100.
That's good enough. But anyway, Yes Bank is moving higher ahead of numbers. Just point that stock out, though the press conference has been cancelled. This is what our reporter Ritu is telling us, that there's going to be result at 3 p.m. but no press conference. But that stock has moved to the high point right now. Ashwini, you said that you are buying right now. Of course, the Nifty Bank and Nifty with stop loss perhaps at day's low. In terms of individual names on Yes Bank, is there a trade?
See, Yes Bank, it's way too choppy and probably not the best banking stock. If you have to, buy something, maybe try to buy into these PSU banks, which as a group could rally given, bond yield, etc., which is coming off. But I don't think Yes Bank, given other issues, is likely to have a secular move unless something gets announced. So we are more bullish today on PSU banks.
Okay, fair point. I mean, the expectation is that something could come from regulators. And yes, bond yields have moved down to 786 now. We never thought that possible about even a month back. So steep fall in bond yields should initially be very positive for public sector banks. See some green over there. We'll take a break on that note. Okay, we don't take a break. We are discussing financials, so let's continue with it. I'll thank our technical experts. We're going to keep coming back to you all probably on the hour or maybe even on the half hour. The finance stock on our radar is L&T Financial, taking a big knock today, actually at a 52-week low after the management said the company has an exposure of 1,800 crore rupees to the island of its group. Other than that, the numbers do look good. There is also an exposure to Supertech. Listen in from the Managing Director, Dinanath Dubashi, about the IL&FS exposure.
My exposure to IL&FS is nil. My exposure to IL&FS Financial Services is nil. These are the two companies which have defaulted. So I would like to be very clear in this. My exposure to ITNL is nil. My entire exposure of 1,800 crores is to subsidiaries, is to road projects. 5 out of them are operating road projects and 1 is completed road project which has applied for COD, which is just about 100 crores. 1,700 crores is to operating road projects. All my payments, all my repayments are on time. In addition to that, 450 crores are the reserves, debt service coverage, major repairs, all these reserves which are being completely controlled by me. 722 crores out of that 1,800 crores is in IDF. That means it is guaranteed by the Government of India. We don't expect a single rupee of loss from this exposure. In fact, all these projects have positive equity value, and hence we expect that when the new management of IL&FS starts selling its assets, in fact these will be the first one which will be sold. There are already some talks, some discussions on that, and we may be actually be prepared, and in fact for the refinancing there may be some fee making opportunities for us. We have a 800 crore exposure to 3 projects of Supertech. All these projects are almost, mid to late stage completed projects. We are the sole lender once again. We control the escrow. There is a receivable cover of 1.98 times. There is a asset cover of 2 times. From our 3 projects, we don't expect any losses whatsoever.
Welcome back. Well, we've been discussing a lot of sectors, so let's now shift to the paint stocks. They've been losing colour all week after Kansai Nerolac first and then Asian Paints disappointed in the second quarter. Abhijit Roy, Managing Director and CEO of Berger Paints, joins us now. Good morning, Abhijit. Thank you very much for joining us. First, let us get the demand picture in. You normally expect demand to move up in the October to December months. Rain's over, people painting houses. How is it looking? Give us an idea of decorative and industrials.
So as far as decorative is concerned, even second quarter was reasonably good compared to last year. The industry in general, and at least in our case, the demand was reasonably good, I would say. In the third quarter, in October, it has moved up as is expected because the season has been postponed a little bit this year. So October has been good so far in the decorative category. As far as industrial is concerned, it's a mixed bag. In some of the cases, we are seeing good growth. In some, it has moderated a bit. So overall, the industrial growth also has been reasonably good so far.
Abhijit, hi, good morning. Thanks for joining us. Asian Paints had indicated that the demand situation is quite uncertain because of the monsoons, the lesser than normal monsoons, the elections, etc. Over the next 6 to 12 months, what's your assessment of how demand could shape up?
I think, fundamentally things haven't changed much. There has been some distortion in the second quarter due to the implementation of the GST. Which impacted, for 1 month the sale in the month of July. But overall, the demand has been pretty good, I would say. Specifically this month, we are seeing, a reasonably uptick, in terms of demand for decorative. Industrial has been chugging along at a normal pace. No great improvement or deterioration has happened.
Okay. Could you manage any price hikes?
We have taken a price increase in October in decorative, which will cover almost all of it, but maybe a 1% more is left, which we can take at a later date if required. If the prices keep on escalating, then maybe we will have to take that price increase.
How much was that increase?
We took about 2.5% in October.
Have you gained any market share in the industrial segment? Because you were telling us that the industrial segment is chugging along at a steady pace, but players like Kansai, Nerolac, etc. have told us that they see a slowdown in the industrial segment. So have you managed to gain any market share lately? And what is the market share now?
Kansai or companies, each company has its own strengths and areas of strength. So they are much stronger on the car segment, which may be slowing down. We are not present there significantly. Our presence is more into two-wheelers and commercial vehicles. So the scenario is different for us. Therefore, you will see a different, sort of a growth rate projected by us than what Kansai is saying.
No, I'm just trying to understand what your market share is now. Tell me about the blended market share then. Has it gone up, gone down?
I think the results will come and you will see for yourself. I can't, tell you at this stage. But as far as demand is concerned, I think it has been reasonably good so far.
This rise in crude derivatives, Abhijit, does it hit the margins of both decorative and industrial products alike? Or is there more hit in one? Yeah, please.
It is much more in industrial, and that's one cause of worry, because it is not easy also to pass it on, unlike decorative. So industrial side, because you have to bargain with the OEM manufacturers, and then only you get it. So it gets delayed a lot, and therefore the industrial side we are suffering a little bit more than decorative.
So there's no risk to your guidance at the moment, right? I mean, you had earlier indicated that a 12 to 14% volume growth is on the cards. Margins will be around the current levels. Because of what's happened in the environment, the slowdown, etc., you don't see any major risk to that guidance?
Not at all. In fact, it may improve a little bit from what I had projected earlier on volume growth. As far as, profitability is concerned, it depends still on the rupee and in terms of the prices of raw material. As of now, it looks reasonably okay. Of course, in second quarter, as we have seen in results, there was pressure on the profitability because the passing on of the price increase was delayed, and therefore that impact will be there. But otherwise, it looks okay.
Okay. Well, just a final word to persist. Abhijit, some two-wheeler dealers were very despondent about the market, about the festive season. Some AC guys were also despondent. So that's why we are just asking you again, what are you picking up? The demand situation doesn't look bad to you.
As far as I am concerned, at least in our case, the demand has been reasonably good. And probably the results will speak, but as far as October is concerned, it has improved further from what it was in the second quarter. So I don't see any major challenges as far as demand is concerned.
It's really good to hear you. We are actually celebrating Prosperity Day over here, and it's good to hear that probably there's only product-wise despondence, but the rural demand in several pockets is good, and that's exactly what Abhijit is telling us. Decorative paints demand is good. Okay, thank you very much, Abhijit. Have a great festival season. We'll check up with you after your results. For the moment, let's focus to commodities. Manisha Gupta is here with the early trends. Morning again, Manisha.
Well, thank you so much for that, Lata. Well, we have seen, continuous pressure continue in case of the crude oil prices there. We are trading nearly a percentage point lower in the international markets. We are down 10% now for the month of October. And there are various reasons that have continued to pressurize the prices. The fundamentals, one, of course, have been about increasing supplies. And the markets do understanding that for the long term, it is going to be demand that could slow down, but the supplies would continue to increase, especially from US, Saudi Arabia and Russia as well. The global equity sell-off has been yet another reason that the decline has been so sharp, and you have seen the speculative long positions continue to unwind at a fastest pace in last 1 year, and that's pulled the prices further lower. So nearly a percentage point down yet again on the MCX is how we have opened trade today, and the markets would continue to look at the US inventories as well, where we have seen a fifth straight week of build-up in inventories that seems to have done more damage to the prices there. Take a look at the gold and silver prices, and we continue to hold quite firm on that. 0.25% up in the international markets, and you are looking at 0.5% of gain now coming in for the gold prices. 32,000 is here to stay. More gains is what the markets really are talking about as we inch closer to that 1240 mark in the global markets there. It is safe haven buying. It is about finances, political tensions, and physical buying that has started to pick up in India and China and some Middle East countries is what really seems to be supportive that space. The base metal prices in the meanwhile have been quite mixed. It is a fourth straight day that you have seen the steel prices gain up in Shanghai, but no such luck for copper. That continues to decline for a third straight day. You have seen some profit taking come in for aluminum, while the fundamentals on that one are positive, and that's the reason you have seen just 1/10% of a decline come in there. Lead has been your gainer through this week, and that's because of constant decline in LME and Shanghai inventories and strong demand for battery. That has been keeping that metal on the stronger side. The other metals trading quite flat, and strong steel is something that has done well for the nickel prices, which also are trading on a firmer note in Shanghai and LME. It is buy calls across street from Glow Value today. They are looking to buy into gold for targets of 32,500. It is a buy coming back in the crude also from them. 5,150 is a positional call that they have given. Natural gas is yet another area where they are advising a buy with targets of 238 for the day today.
All right, Manisha, thanks a lot for that. So that's our commodity corner. But let's move on back to equities, our first love. KPIT Technology is the stock on our radar right now. The constant currency revenue growth of 2.9% is in line, while the margin improvement of 150 basis points is much higher than estimates. Kishore Patil, the co-founder, MD and CEO of the company, joins us now to talk about that. Mr. Patil, good morning. You've said earlier on that you will exceed your margin guidance of 11.5% to 12.5%. Can you give us any indications of how much you could exceed it by?
So, good morning to you. I think we are very happy with the way the results have come up, specifically on the margin front. In the last year or so, we have basically focused on 2-3 things. One is a change in the mix of the revenues, which are more driven by high-end engineering services, digital services, where the rate realizations are higher. That is a point one. The second part was operational efficiency, which basically also means that as gross margin go up, also we do not increase any SG&A in addition to for additional revenues. So with both this, typically our H1 operational EBITDA has come to 14%, which is ahead of 11.5 to 12.5 range. So we do believe that we will be in a position to maintain that in the second quarter. So yeah, overall for the year, I think our operational EBITDA margin may be 14% or a little higher.
Okay. Mr. Patil, good morning. Give us some idea of deal wins. I mean, since your results are good and, of course, more on the margin front, is the situation looking much better in the digital and the high-end industrial space you're talking about?
Absolutely. I think there are, as I mentioned, there are 2 focus areas for us, engineering services, which automotive, that is basically automotive and mobility engineering services, and the digital part. On automotive digital services, we see a significant traction. I mean, we are working in some of the latest areas which are going to be significant in coming years, like autonomous and electrification. And we already are working in multiple programs, but the recent announcements by BMW actually is a very proud announcement for us, which basically talks about being a technology partner to a very strategic platform which BMW is building, which is one of the few globally, and which is for over next 3 years. So I think this kind of engagement also gives us confirmation of our strategy, which is create the global presence. We have a very strong presence in Munich. We have very strong presence naturally globally and in India. So being recognized in that global technology space, that is the strategy, that is what is winning us the deals. And this BMW deal for us is very important from that perspective.
Okay, just a clarification. You said this, you're targeting margins of 14%, right? Is that by the end of FY19 or FY20? And
FY19.
Oh, FY19, the margins will be 14%.
Yes.
And is this
Operational
assuming,
margins.
at what level are you assuming the currency?
Let me just clarify on that.
Sure.
We had given 11.5 to 12.5 as a operational as a EBITDA before any deal expenses, which we are going through this specific. So our operational margin was basically 11.5 to 12.5, which we will exceed more than 14% by the end of the year, and that is what we are seeing.
Okay. Mr. Patil, any other reasons why you will be able to improve your margins? I mean, will you be able to bill higher? Is there any other?
Yes. So I think we will be absolutely, as we have mentioned, that our revenues will be in the range of what guidance we had given, 8 to 10%. In the first H1, we are close to 10%. So we'll do that number and exceed the profitability numbers. But we do believe we have a very significant traction. We expect traction in the key areas. So our growth should accelerate. In engineering anyway, we have been growing between 5 to 6%, 5 to 7% actually quarter on quarter. So which is a very strong growth, and digital is growing more than 5%. If we can accelerate that a bit, and which is supported by some of the other SBUs, which or other practice areas, which currently are little, I would say, slower than what we expect. Then I think we could also see a better growth also in, and that will also drive margins.
Okay, all right. On that note, we will end this discussion. Thank you so much for joining us, and all the best for the quarters to come. That's KPIT Technologies, good margins, and they believe they can do better. We'll take a break on that note, but up next, Wipro is one of the few stocks seeing a bit of green today. We'll hear it out from the management in just a while from now. Stay tuned. Well, as promised, we're going to talk about Wipro now. Wipro reported a good set of numbers. My colleague Kritika Saxena caught up with the management to ask if the company could get back to matching the industry growth rate by the end of this fiscal. Listen in, and thanks for watching Bazaar.
The growth has been very secular. I'm very happy with our performance, both on revenues and margins, on all of the 6 strategic levers that I talk about, across verticals, across service lines, across geographies. The demand environment is robust. So I feel quite good that, when there is a secular buy and see. And of course, there are some pockets of work that we still need to do. But broadly, on the whole, I feel quite good. So if we consistently continue to execute, which I'm very comfortable on our execution, we should be there very quickly.
So is it just healthcare that is the SAR point right now? And do you think that by the end of this fiscal, you would be in a comfortable position to see a turnaround in the healthcare US business specifically? So
if you ask, degrowing businesses, healthcare definitely because of the ACA issue with our HPS acquisition. We still have work to do in the India restructuring. We just announced the restructuring and as we pivot that business. While Middle East and comms have grown positively, I would always wait for 3 quarters make a trend for that growth. So I think all the investments we made, some of the leadership changes, some of the repivoting that we did are showing very good early signs in terms of pipeline. Of course, we measure a lot of lead indicators, pipeline and order book and stuff, which is looking good. But I would still wait a little bit more for them.
How is the demand environment looking like? The sense seems to be that things are picking up. The worst is over for Indian IT at least. Is the worst over for Wipro? Is the demand environment for your clients looking better now than it did earlier? So compared to FY18.
So Kritika, if I look at the demand environment for ourselves, right? First of all, the pipeline is looking really good, right? And like for what we discussed last quarter as well, our order book rates have been very good, right? They have been growing quite nicely compared to year-on-year growth rates, right? And also the nature of the demand that we are seeing, right? We are seeing demand in the areas of digital. We are seeing demand in the areas of cloud, cyber, right? These are all the investments where we have made the investments. And we do believe that with the right kind of investment that we have made, they're really paying off right now. So the demand environment looks fairly robust for us right now.
In the adjusted figure, can you break up the margins? What was the impact of rupee appreciation, rupee depreciation, and what was the impact of the other areas that gave you benefits thereby?
we have improved our margin from previous quarter by 2.5%, of which 70 basis points have come through Forex and 180 basis points have come through operational improvements. And operational improvements is broadly in three categories. One is we deployed our automation much more in quarter 2 compared to previously what we had done. That has improved our realizations. Second is utilization, which you saw an improvement as operating lever. And third important lever is that we have been able to get a lot more operating effectiveness in some of our delivery units and our subsidiaries, and that has contributed also to a gain in sequential margin expansion. So combined of these three is that 180 basis point operational improvement which has helped us in the quarter 2.